Okay, folks, welcome to Best Stock Charts for the new trading week. I'm going to do a live stream today because I need to be on a road trip in only a few minutes, and I don't have time to edit this. So forgive any blurbs, mistakes, errors. Call it what you will. It's the risk of doing live streams. All right, so we're going to talk about today a mix of stocks, uh, and not just stocks. One is natural gas. The new Fed meeting, something just happened here, weird. And how's my audio? Is that okay? And the mix of positions that we're looking to put on here is one that is favored towards A, being market neutral or uncorrelated to the markets. How do we do that? We do that by using natural gas. Natural gas is about 33% correlated with the S&P 500. So if we're going into a week where there's a lot of indecision, well, then maybe it's natural gas that we want to look to put on so that we're uncorrelated to the market. Really don't care what happens in the equity markets. We're trading a commodity that's uncorrelated. Then we want to take a look at other names. What if the Federal Reserve goes with a quarter basis point cut? Well, the small caps and mid caps are probably not going to like that. So if the market rallies, what do we want to buy? We're probably going to want to buy the larger cap names. They're not as beholden to the debt markets as are the small and mid cap names. In short, they're not as interest rate sensitive. So you want to look at your big cap semis, your big cap software companies. And if they do go a half basis point cut, which is at current this morning from yesterday, even last night when I did the week ahead commentary, members that's posted in the members area, they are now at a 50-50 probability of cutting rates 50 basis points. That was at 55% last night. It was 87% the night before last. So something's happening out there. So I wouldn't be the least bit surprised to see they're in a blackout period, the Federal Reserve. So they can't say anything in advance of the Fed meeting. Don't be surprised. Wall Street Journal issues some sort of a article coming out warning of a maybe even a 75 basis point cut. They've done it in the past. Do a Google search back in 2022. They were proven wrong on that, but they may try to goose the market to salvage the credibility of the Federal Reserve. So if they do cut 50 basis points, I doubt 75 basis points, but if they do cut 50 basis points, then you're going to want to look towards if the markets rally. If the markets rally, then you're going to want to look towards your mid caps and your small caps. So that's why we have a mix today. So keep that in mind as we go through these. And let's go to the names that we want to go analyze today. I'm going to do this briefly because I don't have a lot of time. Duolingo, D-U-O, the symbol. Boil, B-O-I-L, the symbol. That is a leveraged product, not for the faint of heart. If you don't want the volatility, that's fine. I understand it. Look at UNG, far less volatile, same chart setup. MHK, that's Mohawk. AWT, I forget the name of this one. I think this is another industrial. O'Reilly Auto Parts. I want you to think about this. We had the uninversion of the yield curve. And what does that mean? It means that in all probability, going by historical trends, we're going into recession. If we go into recession, guess what? Car sales go down and auto parts go up because people are going to keep their cars longer. O'Reilly Auto Parts, Advanced Auto Parts are looking very, very good here. Right now, our pick is O'Reilly for the chart setup. What else we're looking at in the larger cap names is a kind of a mix. So this is if they go a quarter basis point. So we're looking at Netflix. We're looking at Amgen. We're looking at Lululemon. Lululemon's been beaten to death. We're going to be interested in that one. Good setup. All of these have a Bollinger Band squeeze. What does that mean? We have the Bollinger Bands trading inside the Keltner channels. A lot of energy is getting built up. We're looking at stocks that have the probability of firing off to the upside. How do we know they're going to fire off to the upside? We look at two things. One, what's the primary trend? If the primary trend is up and they're in a consolidation, then the probability is that they're going to fire off higher. There are no guarantees, they're just probabilities, right? So that's the probability. How else do we know? So we stack the odds in our favor on these trades. You look at your moving averages and you ask yourself the question, self, are the moving averages stacked positive? Meaning, if I'm bullish and I want the stock to fire off positive, well, is my 10-day trading above the 20-day? Is the 20-day trading above the 50-day? Is the 50-day trading above the 200-day, et cetera, et cetera? You get the deal. So choose your grouping of moving averages. It doesn't have to be that mixed. It could be Fibonacci's, whatever you want to choose. Just make sure the shorter term duration moving averages are moving up above the longer term. That's a bunch of moving averages. So before we get into the symbols that we're going to discuss here really quick, we did the scans vis-a-vis TrendSpider automated technical analysis, awesome tool in your toolbox. If you're not using TrendSpider, it's like an archer not having arrows in his quiver. Folks, I've been in partnership with TrendSpider since 2017. All I do is just see them increase the value of this product without necessarily increasing prices all that much. The one thing they did do is they no longer have a 7-day free trial offer. I was reminded by the owner, because we had a meeting with the other day, goes, you're the only guy that gets the deal to have a 14-day free trial offer. So I give it away free to our silver and gold level members. Sign up, 14-day free trial offer. Go over to the Contrarian Trader. I think there's a link below. There may not be. If you watch this on Twitter, link above. If you're not ready yet, that's fine. Take advantage of my 35% discount code. That's the minimum. They could have even a better deal. Use the link below on YouTube, link above on Twitter. Get signed up for TrendSpider automated technical analysis. If you're not an experienced trader and you don't know how to draw your support and resistance lines, they will draw them for you. I'll show you how they do it today. If you're experienced like me and you like to draw your manual trend lines, you still can. However, the beautiful part is that they will help validate the accuracy of your trend lines and perhaps show you some that you never even thought about. So let's get to it. And really quick reminder, the Bull and Bear Banter forum is open. It is open. It is ready for you to join. It's free for now. It won't be for long. This is the chat feed. This is the main feed. Yesterday, I posted a couple of trades here that we booked profits on. Bitcoin, gold. I was still long of gold. We booked some profits. What else we booked profits on last week? Netflix, we were short. We booked profits there. We booked profits on Altria Group. We were short there. We're now out of it. And I posted some of those trades in the feed, even though this is not a members group. I just wanted to show those that are signed up. They don't know me, what we do here at the Contrarian Trader. We post the trades. So let's get to it. Let's go to the chart that I prefer. And we're just going to modify this bit here. In red, you're going to see I believe the Bollinger Bands. Yes. And we want to make sure that these are 2 standard, not 3 standard. So let's modify. And then let's bring up our Keltner channels. And as you can see here, even the triple Qs are setting up for a Bollinger Band squeeze. Again, the reminder, what's a Bollinger Band squeeze as we define it? The Keltner channels are trading, the Bollinger Bands are trading inside the Keltner channels. So you can see that's happening on a daily time frame on the triple Qs. Now, do they fire off positive? Do they fire off negative? We don't know yet. We don't know. Let's take a look at our first stock here, Duolingo. This is a mid-cap stock. This is a bet that the Federal Reserve is going to go by a half basis point cut. And even if they don't go by a half basis point cut, I think this is Dingolingo. This is not. This is FANGD Network Group. I think this is Duolingo. Let me validate this. Duolingo. Maybe I thought of the wrong single. Ah, DUOL is Duolingo. Okay. All right. So that makes sense. All right. Either way, this is still a mid cap stock. I screwed up my symbols. That's the danger of doing this live. You're walking out there in public without a net, a safety net. Let's say hello to folks here. William, thank you very much for the good audio. I should have checked that earlier. Appreciate that. All right, so Duolingo daily chart. You can see how tight the Bollinger Bands are. We had a beautiful breakout on Friday. Actually, you could argue that we broke out here. Let's do this. Let's get rid of this one here and reestablish and say, you know what, we're going to use right here as a breakout. It was the wrong one again. We're going to use this as our breakout point, this high here. And we broke out on Thursday, did a retest, and then a reversal bar on Friday. This is setting up very, very nicely for a continuation move up higher. Now, what we want to do is, you can see that we have the 8-period moving average here. It's still below the 21-period or the 20-period moving average on the chart. So our moving averages aren't stacked. We want that 8-period or 10-period above the 20-period. That way we know the probability is on our side that we're going to get higher highs. We're not there yet, but it's looking pretty darn good. So DUO, a strong looking stock moving into the new trading week. Sticking with the mid cap stocks, let's go to MHK, Mohawk Industries. Again, you're looking at a Bollinger Band squeeze. And what does this imply? It implies this. Take a look at this chart, right? So we had this beautiful, beautiful prior Bollinger Band squeeze. What did it do? It fired off like a rocket ship. Then it got exhausted. What happened? We pulled back, went into a consolidation. What's establishing right now? More energy, same as what built up back here. Tug of war between bulls and bears. And then ultimately, the institutions come in to decide which way it's going to go. And they reflect their participation vis-a-vis volume. Note the breakout here. Volume. Note the breakout here. Volume. Note the breakout here. Volume. So it's institutions, as William J. O'Neill would say, when institutions join in on a individual stock, especially a mid cap, it's like an elephant entering a bathtub. It just overflows with energy, overflows with volatility. And you can see the volatility is firing off here to the upside. So this is another one that's on our watch list. Very, very high probability trade. The next one is AWT. Never heard of this company before. AWT. That's not the right symbol. AWT. Did I write it down wrong? Let's go back to this. This is how we run the scan for the mid caps. I think I wrote it down wrong. S&Ps, mid caps. We're going to run the scan here. This is the setup. AWT. And these are all the charts that the interactive brokers is looking good here too. Sorry for the pause here. All right, I think I wrote it down wrong. And now I can't find it. All right, I don't want to belabor this. Let's go back. Let's finish off the other ones. I have a bunch to go over. O'Reilly. Here's another one. ORLY. So here's a chart. Again, very, very tight neck on these Bollinger Bands, and we like that. We like that. Do we have earnings coming up here? We do. Just be aware of earnings coming up in the coming months. Fundamentals, rising, revenues, looking good. So you could take a look back here where you had a similar setup, very, very tight neck on the Bollinger Bands, not even as tight as what they are right now. And I think that this is probably close to a buy. I need to see a closing high on O'Reilly above this support level here. And I would be a buyer of the stock. Ideally, after the Federal Reserve announces next week, we want to get that in the rearview mirror. I may even buy the dip if they sell it off after the Fed meeting, and I'll use a tight stop on it just in case the market begins to go into free fall. You never know what's going to happen right now. Remember, this past week, or the week before last, I should say, you had an uninversion of the yield curve, which is historically implies that you're going into recession. And if you overlay unemployment rate, it usually grinds up higher with the unsteepening of the yield curve, again, implying recession. So you don't know whether or not you're going to get a true rally when the market or the Federal Reserve cuts rates. It could be priced in already. Remember, we've had, 6 consecutive up days on the triple Qs, on the S&P 500, on the subsectors. So we need to be on guard because there could be a baited trap ahead of us. Because when you take a look at the volume bars quickly, when you take a look at the volume bars on, let's say, the triple Qs, take a look at the volume. We've had 5 consecutive up days. My apologies. You've had volume dropping off. We've only had one day out of the past 5 where volume has been above average. So am I still skeptical of this rally? Darn right I am, because we know historically that the equity markets, once the yield curve uninverts, jobless claims go up, and the Federal Reserve cuts for the first time, that's usually the top in the market. But we don't know that yet. So we're going to, the charts close bullish on the week. Therefore, we're going to go into a bullish perspective on the equity markets. Back to ORLY. So we're looking for a continuation breakout here, ideally after the Federal Reserve. It doesn't have to be, but O'Reilly Auto Parts looking like a great setup here, because if you do believe that we're going into recession, as the yield curve implies, that means auto sales are going to drop. People are going to keep their cars longer. What are they going to need? Replacement parts. So O'Reilly looking very, very good. This is a very good recessionary trade, always has been, along with Advanced Auto Parts. Let's bring that up as well, AAP. I haven't looked at this one. This has been beaten up of late. They probably had poor earnings here. So our preferred chart here is O'Reilly, given the technicals and the rising revenues. The next chart up is, everybody knows this one. Now, this is if the Federal Reserve goes quarter basis point. So if they go quarter basis point, the mid caps are probably not going to do as well. Maybe they will. We'll see. But we know that if the market continues to rally, the mega caps are probably going to continue to do well as well. Because, again, they're not interest rate sensitive. So Netflix, of which we were short early on in the week, and thank God we booked profits here. We booked profits down here. We covered shorts. Now it looks on this daily chart, we need to think about going long. We did not break out on Friday. Very, very close, though. And when you take a look at a weekly chart, it looks as though what we're doing here is setting up for a bull flag setup. That's a continuation breakout pattern. So Netflix, best of breed name. If we get a quarter basis point cut, equities still rally. Expect the larger cap names to outperform. We'll probably be looking at Netflix. And again, going back to that daily chart, what do you have? Same thing as what we've been talking about. Very tight Bollinger Bands, very wide Keltner channels. This is in all probability going to break out higher. Why? Moving averages are stacked, or beginning to stack, And the primary trend is what? It's up. All right, so we're going to respect the primary trend because that's the path of least resistance. Now, moving on to Amgen, really good looking chart here. AMGN, a little bit of diversification. You saw LABU, which is a leveraged product, leveraged ETF product, biotech product, I should say, broke out last week. Now, looking at Amgen, let's take the drawings off because this is a warning flag. The shares of Amgen are in a very, very tight consolidation. Bollinger Bands, again, very, very tight. Normally, they should be outside the Keltner channels. They are not. They are inside the Keltner channels, and this is unsustainable. This is going to fire off one direction or another. So what are the probabilities? What's the primary trend? Up. Our moving averages are a bit flat. We broke out last week out of a resistance level. The probability with this trade, here's the breakout. The probability with this trade is that you have resistance immediately above at around 336.24. So ideally, what we're doing here is that we're entering this trade after it recaptures the support level here. And what I would do is create an alert. I got to take the real-time data off. Okay, let's try it now. There we go. So we don't want that. We just want this. And we care about a closing on a daily time frame. AMGN breakout. Bollinger Band squeeze. And we'll keep this active for 13 days. And I also want to know what if we pull back and do a retest of this breakout point, which is highly probable, especially with overhead supply above. I want to buy that pullback. Not 100% of the trade, maybe 20, 25% of the trade max, because you want to buy on strength. You don't want to buy on weakness, right? So if you get a pullback here and a retest, you nibble. Then if you get follow through and you break out above resistance, well, then you know that your original hypothesis was accurate. So what do? You add more to the trade. So you average up. You're not averaging down, you're averaging up on a momentum trade. Now, last one up is Lululemon, LULU. Now, this stock, let's go to a weekly chart here, has been beaten to death. They had an earnings report back here, and you could see that it has just been in a downtrend channel. And this is one you really need to be careful of because stocks that are weak generally tend to get weaker until they don't. So how do you identify whether or not a stock is done being weak? Well, you look for it to stop going down. That's step number one. It's got to stop going down. Do we have that here on a weekly chart? Forget about the daily chart. When you have a stock that's in a downtrend, you should be looking at weekly charts and monthly charts, not daily charts, and especially not intraday charts, unless you're a day trader. I'm not a day trader. So here's Lululemon. We stopped going down here the week of August the 5th. We have yet to put in a new weekly lower low. And in fact, what it's done is it has rallied and it has consolidated. And what's it done? It appears as though it has begun to put in a higher low. What it has not done is broken out to new higher highs. So what I want to do here, I want to know when we get a breakout on Lululemon, especially a breakout that results in a close with a new higher high. And I don't care about it. I don't care about it trading intraday above this resistance level at 275.79. I only care about a close. It must close above that mark. Okay. Daily Bollinger Band squeeze, weekly higher high. And we're going to keep this active because this could take a while. We'll keep this active for over a month. We'll go with a 4-hour signal. Our alert is set. Let's go back to the daily chart. And you can see here on the daily chart, what we have is a Bollinger Band squeeze, very tight the Bollinger Band squeeze inside the Keltner channels. We have our alert set up here. So we're good to go. We're good to go for the new trading week on these names. Especially when it comes down to a stock that's in a downtrend. The primary trend of Lululemon is still down. Unlike all the other ones that we went over, they're in uptrends. In this case here, you're dealing with a stock that is in a primary downtrend. So you need to be very, very careful. It needs to earn the right for your investment dollar. It needs to earn the right of your investment dollar. How does it do that? It proves that A, it's stopped going down. B, it's putting in higher lows. So check 2 boxes there. That's not enough. That's not enough. Now it's got to break out to new higher highs. That's telling us that the primary trend is now changing from down to up. And therefore, you're getting an edge. You're getting a higher probability of being long the stock and making money. Folks, don't forget, we have the free forum open. It won't be free for long. So link below on YouTube, link above on Twitter. Say hello. Fill out the profile. Make sure you say hello. Engage, engage, engage. There's a lot of nice people here. Great stuff. Great information getting shared out. And also, don't forget about TrendSpider. I will put out their QR code if you're interested in that. That's in front of you. If you want to scan that, head on over. Use our discount code CON35. Before you use that discount code, look to see whether or not they have a better deal. They may have a better discount for you. They do a lot of promotions. So use the link either way. Help support the channel. I am a partner. Help support the channel so I can get this content out to you. And head on over, get TrendSpider, a minimum 35% discount code. I give it away free to our silver and gold level members. Sign up, 14-day free trial offer. Have an awesome weekend. I'm going to hit the road.